Welcome to the channel. Today's date is January 19th, 2025. And today we're going to be talking about the importance of T-bills. And we're actually going to show you how we trade T-bills in Charles Schwab. Let's get straight into it. Again, thank you for tuning in. If you like this information, please like, please share, please forward, let a friend about it so we can grow this channel. As I said, we're going to be talking about T-bills. And there's a big separation, a difference in T-bills and bonds. T-bills are just shorter in duration, anything 52 weeks and lower. Bond yields are a little bit longer. And today, we do want to make sure that you know something that we had to learn. When you hear someone and they talk about, let's say, Warren Buffett, and they say that he has his money in cash, he really doesn't have his money in cash. And you hear that a lot on Wall Street. Most investors or people that invest and try to grow money, they never basically let money sit in just in cash. And so when they say cash, they mean T-bills. So let's get straight into how we trade on Charles Schwab, and then we'll talk about some of the importance of T-bills to your portfolio. So when you log into Charles Schwab, you're going to see the trade button, and then we're going to click on bonds, and you're going to see a screen like this. And as we talked about the difference in T-bills and bonds, this one goes from 3 months out to 30 years. We can purchase any bond. So we like to do 3 months. So when you click on the 3-month treasury, you're going to go to a page that looks like this, which has a variety of different bonds. It's a Sunday, so you'll see over here where it has a minimum and maximum. They got the minimum being $299. They got 150. On a regular trading day, you'll see where you can actually do one bond, which would be $1,000. You have the yield on that T-bill, and then the maturity date, it expires and the money will be into your account. And where it says here view only, it'll normally have a buy that bond. So that's a simple way. That's how easy it is to trade T-bills. I mean, it's very, very simple. They make it easy to do. I used to trade in Treasury Direct, but I didn't like having a whole separate account away from my brokerage account. So that's why I just simply use Charles Schwab, because there is some benefits to using Treasury Direct, because you can do 1 month T-bills, but you can't do Charles Schwab. Don't give you the opportunity to do 1 month. So you can do that. So that may be a reason to use Treasury Direct. It's all up to you. The most important thing is that you're not letting your money sit somewhere and not earning some type of interest. The benefits of trading T-bills, besides that, it add diversification, diversification to your overall portfolio. I mean, sometimes there's times that I'm 100% stocks. I mean, I'm in my 50s now. When I was younger, it was different. But as I get older, I'll probably start adding more T-bills, especially after I completely retire and not working no more. I might or don't have any type of stores or anything like that, and let's say I'm drawing down from my pension, I'm going to want to have some T-bills, because the worst thing that can happen to you when you're a retiree, if you get the stock market crash and you actually need that money, you need money from your stock portfolio. So that means you'll be selling stocks at the lows and you won't give it the opportunity to come back. The second reason besides diversification is the opportunity to continuously trade. As y'all know, I'm a pretty bear on the market right now, and I don't really like to say that I'm a bear, because I believe that the stock market is going to go down. I can't say that I believe that the stock market is going to go down, because I don't know when, I don't know why. I just think that the stock market is completely overvalued, one of the most overvalued stock market that I've seen in my lifetime. And I don't want to ride the stock market down again. I wrote it down before, and I don't want to do it. And I actually believe that my T-bills, my 3-month T-bills, over the duration that I have to wait until the stock market comes down, I believe that my 4.5, 4.25 T-bills are going to outperform the stock market. It may go up 10% from now, but then we may get a big time correction, which then obviously I wouldn't be losing any money. And so I would be outperforming. So the second reason, as I said, is it gives you the opportunity to continuously trade. As I said, I like to do 3-month T-bills. I got several of them. So every once in a while, one comes up, maybe once a week, every other week, one comes up, and it gives me the opportunity to trade. I like to invest. And right now, with the stock market being so high and me not investing, this does give me an opportunity to invest, and it comes, every 3 months. And that may not sound like a big deal, but that's one of the things that hurts investors the most is the need to have activity. So sometimes you may go into stocks that you may not like so much because you just feel you need to do something, and T-bills can replace that urge you have to trade. And then one of the second parts about it is that they're real liquid. So I'm waiting on the stock market to crash. Normally, when the stock market crashes, it comes fast and it comes hard. And sometimes it takes time, to find the bottom. But we're not in the business of trying to find a bottom. Just like I can't pick a top, I can't pick a bottom. So I'm not in the business of that. Once the stock market gets to where I see value in it, it's going to give me the opportunity to sell those T-bills. So let's say in the next 2 months, we get a 20% correction, and I find that to be a good entry point. But I don't really have no cash laying around because all my money is in T-bills. Because these T-bills are so liquid, I would be able to sell one to get ready to buy stocks. And the good part about that is another good part about T-bills, unlike long dated bonds, is that, as you know, yields move up, that means bond prices is moving down. So I don't want to be in long dated bonds, for two reasons. One, bond yields are actually rising right now as the Federal Reserve is lowering interest rates. Bond yields are rising. They say they believe it's for two reasons. One is they think that the government's debt is getting too high, too out of control, and some people just don't want to buy long dated bonds. And that's scary to think that the American government is losing trust with investors to buy, or in other countries to buy our long dated bond. That could mean real trouble for 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 the U.S. government not being able to sell its debt, because that's basically how we fund ourselves here in America. And the second reason is they believe that inflation may come back. They believe that some of President Trump's policies of tariffs and lowering interest rates could could bring back inflation, and keep selling more debt could bring back inflation. So that's why bond yields are going up, meaning prices are going down. So what you don't want is the opportunity to invest in the stock market, and your bond prices yields are up from when you bought it, but the bond price that you paid for it is down, even though you will be made whole. But now if you're forced to sell to want to go into stocks, that could be a real problem. So that's why I would not recommend long dated bonds, but because they're liquid too, and we want to go to T bills, that you won't have that major fluctuation in T bills that you can have in bonds. We talked about diversification already, and then you do get a return on investment. You're going to know your maturity date. You're going to know the yield. Now you have to take that yield because that's a yearly yield. You have to divide that by 4 because you're going 3 months, and that'll pretty much kind of tell you how much money you're going to get off of that T bill, how much money you made off of that T bill. So, so I covered how to trade T bills. I covered why they're important. You can add to your portfolio, and as I said, I go in a little bit more detail of how I plan on using them. As I said, I think the stock market is way too high, and so I'm parking my money in T bills, and when the stock to earn 4.5%, and I believe that I'm going to outperform the overall stock market, even at with 4.5% T bills, and I'm outrunning inflation by a little bit. So I'm happy about all that. And so when the market do crash, I'll have all my money in T bills, and I'll be able to go all in, and that's my plan. The hardest part is to wait. I just gotta wait. Again, if you like this content, please share. Good luck investing in 2025.